Everyone, how are you doing today? So today is May 9th, and we are doing our live stream about the financial news. Just so you know, I do have a couple other live streams planned for this morning. I have one about some breaking news in multifamily, specifically large multifamily. Some pretty interesting data from Fannie Mae and actually a little bit from Freddie Mac. Let's just say the losses, or actually the forbearance, are large, and we're going to talk about that in an upcoming live stream. And then I'm pretty convinced that this quarter is going to be what I refer to as an accountant as a kitchen sink quarter. So I'm going to do another live stream, kind of highlighting what a kitchen sink quarter is from an accountant's perspective. In short, it's where you take all the stuff from the balance sheet that you've been depreciating or kind of managing. Good morning. And you go ahead and flush that through the income statement. So we're going to talk about that in an upcoming live session. But we got to start with the financial news of the day. And this morning, good morning, got some different points of view. I do try to balance what I'm reading because frankly, I don't presuppose to be right. I want as much data input as I can because for me, it still all boils down to the consumer, right? What is the consumer doing? Are they afraid? Are they greedy? I believe everything kind of eventually rolls up through the consumer. So wanted to kind of figure out what's going on. So first and foremost, Jeremy Siegel. If you are a bull, right? You are a stock market bull. You are going to love what Jeremy Siegel has to say. He's a Wharton professor. He's probably best known for calling Dow 20,000 way back in 2015. So he does have a track record and a moniker for being right at least once. But basically, he's come out and said, you know what? The lows are in. And he's actually quoted as saying, we'll never see those lows again, which that's frankly kind of ballsy, right? Saying never, that's out there, right? I don't know that I would ever say never, but that's what he said. And he goes on to say that not only never see these lows again, but 2021 is going to be a great year because what will be happening is the consumer will be coming back, right? They will be afraid this year. They will be coming back. We will have gotten through, hopefully, a non-eventful winter season. And then finally, all the stimulus from the Fed will start working its magic through the system. And he says with the trillions of dollars in stimulus coming, the animal spirits of capitalism will kick in 2021. Right now, he does admit that a lot of it is sitting in savings. A lot of it is kind of parked, waiting to see what's coming. But to hear Jeremy Siegel talk is to be ultra positive about what is coming. And frankly, as you hopefully know by now, I hope he is right. It's just funner when people are making money instead of losing money, right? It's just funner. So we will see. It is interesting to see the Dow up 455 points. Frankly, the S&P and NASDAQ were also up. NASDAQ is up for the year, which is kind of crazy, with record unemployment on Friday. Sorry about that. Again, with record jobless claims, a print of, I think it was, 15.7. There's still a very big disconnect between the market and Main Street. There's also a disconnect, what I am seeing, what I'm tracking, between the stock market and the bond market. That's where I am looking, right? The bond market, the 2-year is at 0.1 and the 10-year is at 0.7. Not getting a very big return. So one thing I think that the stock market is telling you is, congratulations, up 20% year to date. That's pretty cool. One thing I think that is pretty clear between the stock market and the bond market is both expect the Fed to keep rates at zero for a long time. A long time, I always hate that. It's years, right? It's going to be at years. I think the current question is, do they go negative? The bond market is pricing in negative rates at the end of the year. That sounds like an experiment I hope we don't get to. again, I hope we get through this and we get this big infrastructure bill. We do some incentives to pull manufacturing home, right? I think we've got to add gasoline to get the employment picture down. I'm nervous that we're going to keep unemployment above 10% for too long. So we will see. But again, the stock market and the bond market agree on very little these days, except the Fed will keep rates near zero for a long time. So that's a chess move that all of us can plan for and do as we may. Going back to Jeremy Siegel, you've got to think that stimulus stuff eventually works its way through. It won't sit in cash forever or cash equivalents. So it's when does it go risk on? Because right now risk is off. I wonder when risk goes on. And maybe he's right. Maybe 2021 is the time, right? We just kind of write off 2020 and we see what's coming. So next up, we still have I don't know what else to call it, but an unbalanced market. We got 5 stocks that make up 20% of the S&P and 5 stocks that make up 40% of the NASDAQ. These indices have never been this top heavy, which is interesting. I wonder which of these stocks, like just pick Amazon, for example. I don't know about you and I, but been ordering from Amazon, like seems like we get a package every day. I wonder, right? More and more states are opening up. Consumers should start feeling a little better, let's hope. I wonder if we order less from Amazon, right? If Amazon was kind of that pull forward demand when everybody was scared, but you know what? We're going to get out. We're going to go to our local store. We're going to visit a bookstore. We're going to visit our local clothing store or whatever it is. I wonder if Amazon is net negative in Q2, right? It's sort of like Costco. This is what I'm thinking, right? Costco, if you saw month on month, they were down in April because of all the stuff that people bought in March, right? Emergency buying. So I'm wondering if Amazon kind of sees a tailwind. It's still going to grow. It's still going to be the biggest retailer on the planet, blah, 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 blah. But I wonder if you and I start visiting our local retailers to show them some love because they're getting crushed. So I'm just wondering if that happens in mass, if we help growing up. Yes, AWS is driving revenue. Same kind of logic applies. I wonder how much stuff was pulled forward that they're going to have like an air gap in earnings. So next up, B of A kind of talked about record high money market accounts. This again is a sign that consumers are afraid. Back to kind of Jeremy Siegel's point and something I've been tracking is if the consumer's afraid, they go to cash. There was another $55 billion last week put into money markets. It's now at record levels. So again, Jeremy Siegel might be right? There's the animal spirits eventually have to kick in. You're not going to like earning less than 1% on savings. So when you're starting to see the all clear, if you will, maybe the animal spirits kick in and we launch new companies and new restaurants, and it's just going to be interesting to think about. Next up, got some Bitcoin news. I get asked about Bitcoin a lot. Just do, I guess. But Paul Tudor Jones, huge hedge fund, actually has one of his hedge funds with a small single-digit position in Bitcoin futures. Reading the article, he talks about it being the inflation hedge of this generation. He went on to talk about gold in the 70s and how that was the inflation hedge. And he sees Bitcoin being the inflation hedge of this generation. So if you're a fan of Bitcoin, you now have a legend on Wall Street putting significant dollars to work in the futures contract. We're going to see all the Bitcoin, channels, newspapers talking about a gentleman named Paul Tudor Jones because he has committed significant capital to Bitcoin futures. So I don't know. I don't own any. I think there will be eventually a digital currency. The blockchain, I don't know if you call it a technology or architecture or what you call it, is very intriguing and likely the answer to a lot of things out there. But I'm not smart enough to pick the winner, right? I'm not even sure the winner has been created yet, but Bitcoin's as good an example as any. And then finally, just to have some fun, did you see that Singapore has deployed a robot dog to their parks to encourage people to social distance. I've seen a picture. I actually might make that picture the image for this live stream, but it's kind of freaky. You see this little, I don't know, robot dog come up to you and encourage you to social distance. I just think that's interesting. I've been to Singapore a couple of times, and that I could totally see Singapore doing that. So, thank you. In the end, that's what I got for you today. Again, financial news. We do this each and every day, right around 7:30, except on Thursdays. We do that about either 6:30 or 8. But other than that, we'll do this every day. I do have 2 more live streams coming up. One about breaking news in multifamily forbearance. These are the large apartments. And then another one called the kitchen sink quarter. All right, everybody, take care of yourself. Have a wonderful Saturday. Bye.